Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, good morning, everybody. Welcome back to another live stream. Like you saw there, make sure to use that promo code A1T20, 20% off. We just dropped a link in the chat. Can also be found in the description to check out DNA Funded. Hope everybody's doing well, and hope you are well rested from the weekend. I spent the weekend actually out of town, went to a wedding in Ohio. It was a beautiful wedding, a lot of fun. It's wedding season. We've gone to, well, we're on wedding number 2 there. But it's definitely wedding season. We've got lots of weddings to go to and always a good time. Weddings are a lot of fun. So I hope everybody is staying safe in these crazy markets. But we did get a little bit of a spike up in the VIX, but for the most part, volatility in markets has really dried up. We have gone from an environment which was highly volatile early in the year. April, May, we even saw, some very high levels of volatility. And I personally, as crazy as these periods of time are, they actually do tend to be the most profitable possibilities if I'm looking historically. Long story short, these create really great buy the dip opportunities in stocks and risk assets like Bitcoin, Ethereum, stocks, indices, etc., which have historically led to some of the best returns that I've made in the markets. When we get into this period of time, however, there is something that's challenging about this. In low volatility environments, what typically happens is stocks grind higher. So if you're looking at indices, right? The indices, the NASDAQ, S&P 500, as the VIX has continued to deteriorate or continue to come lower and lower, what that's telling you is that the market participants in the options market specifically are pricing not a whole lot of future movement. And so in my view, I'll go out on a whim here and say I actually think that volatility is slightly underpriced. I do think that there is the potential that you get a spike in the VIX and that we see some uncertainty creep back into this market. If you've been watching the streams and videos, then you'll know very well that I've been very much on the bullish side of indices during the sell-off that we saw in April and May and June. I did very, very well this year, primarily from buying the dip in stocks. And then also being long gold into this jump was a really strong move. Of course, the VIX and gold, they share some characteristics that are they overlap. So, for example, when people get really scared, volatility jumps up, and a lot of times, not always, but a lot of times people buy gold when they're scared. And so we did see this huge move up in gold prices during this time, and that was one of my better trades this year. Gold is one of my favorite things to trade and has been really choppy here recently, but it looks like we might be, I don't want to jinx it because, man, it's been choppy here for gold. We might be seeing a movement higher here that perhaps has some legs to it. Maybe we finally get a little bit of a follow-through move here in the price of gold. Although I'll tell you this, fundamentally, I have a hard time seeing price break through these previous all-time highs without some sort of strong catalyst. When I say catalyst, that is a proxy word for a reason for why gold should break out, right? You've got gold making a move here today, but I would just be cautious not to read too far into this push, right? Because if you are, whether you're a technical analyst or a fundamental analyst, if you are watching gold, if you trade gold, you have to look at these things from the daily chart for a very particular reason. If you only looked at the 1 hour chart today, you would say, oh yeah, gold is really moving and it's gonna, but remember the context that you're in. Gold is in a very range bound and frustrating, choppy market environment. We have to be careful here that we don't assume, just because you're getting a move intraday higher, that gold is going to have some sort of massive follow through. I think as, fundamental analysts, as technical analysts, we have to say, okay, with a grain of salt, we have to look at this move with a grain of salt, essentially. You've had several instances where price looked really strong coming into this 34.50 level just to find sellers push it right back down. Now, again, I'm not bearish on gold. I have a long position as we speak. This is a good trade for me. But I have my doubts about how far gold will go unless you get some sort of decisive, strong catalyst. What kind of catalysts, and maybe you guys in the chat can help me out with this, what kind of catalysts would get gold to really break the all-time high and stay above it? What would give us, the next leg higher? If we're going to break out of this consolidation, what would you be looking for, fundamentally or technically, for a sign that this range is actually beaten and that we have legs to run here on, right? That's the question. Rate cuts? Fair. Interest rates? Yep. Big one is rates, right? That's a big one. Anything else? Why is gold so boring? Man, you're asking the right questions. I don't know. Well, actually, I do have an idea, right? Strong jobs, that's bearish for gold. Interest rate cuts and inflation cooling, that's bullish for gold. What are you left with? A mixed bag and a choppy market. I bought Edgefinder on November 19th, daily driver for prep in my trading business. Big respect to Nick and team for a disciplined pro grade tool. Ruben, thank you very much. That's very kind of you to share your testimony on the tool there with us. At the end of the day, I like the way you put that, Ruben. It is a business expense. If you're trading like a business. Some people even trade under an LLC. The Edgefinder can be a write-off for you. If you're somebody who trades for a living or you trade every day, that is a cool thing. Of course, I'm not your tax advisor, but if you run like a trading related LLC in any way, the Edgefinder very likely could be a tax write-off for you. You could purchase it as a tool, as a part of your work. Tariffs, geopolitics. There we go. Yeah, those are some good ones too. We have yields moving lower today. That is definitely the driver for gold today, is lower yields. Is that weaker dollar too? Yep, weaker dollar. Weaker dollar, lower yields. Somebody mentioned Japan. Here's dollar yen moving lower here this morning. Euro yen moving lower. Yen strength coming in a little bit this morning. Interesting. Euro pound making a little bit of a move. Bitcoin, 118K. Ethereum, 1% up here today. Gold's up 1%. So, yeah, I think that if you're looking at gold prices from a technical perspective, I think we're probably all thinking the same thing. What shows that gold is truly strong? Well, we just marked up this big level of resistance on the daily. This would show gold is strong. It's a really simple, like we don't have to overcomplicate this thing, right? What would be bullish for gold from a technical perspective would be if it did what it has failed to do a couple different times, which is stay closed above this previous high. Now, is there the possibility that this happens and then the market reverses? Yeah. But it's all probabilities. All trading is, all good trading is probabilities. So if we're talking about, is gold technically bullish? Technically, I would say it depends what your time frame is. If you are somebody who trades the 4 hour, the 1 hour chart, I wouldn't say necessarily that gold is super. Well, actually, I take that back. I'm sorry. If you're looking at the 4 hour and daily, the 1 hour chart, right? If you're looking at the lower time frames, gold probably looks pretty bullish, right? Yeah, look, gold's breaking through some resistance. The 4 hour chart looks, looks like you've got some higher lows forming. What I really wanted to get to, though, is the daily chart is where you run into trouble, because the daily chart looks very sideways. Then you get into the weekly chart. The weekly chart looks bullish, right? So if we're going to see a daily chart breakout to kind of confirm those lower time frames and get a bigger move higher, we probably want to see a strong closure above that 3440 level as a signal. Okay, bulls are in control on multiple time frames at once. COT data also pointing that gold is bullish in the edge finder. Yeah, what was let's go take a look here. Institutional positioning, COT data. I forgot what gold did. Yeah. Oh yeah, look at this. So institutions last week bought gold heavily and decreased shorts at the same time. So that is a bullish move in gold price action, or in gold accumulation from institutions. So yes, fair to say that in terms of the latest reported data from the COT, institutions got more bullish on gold. Pretty interesting. So we'll see. To me, if I'm looking at gold, like I said, there's nothing to do here if I'm not in the trade. There's two situations in which if I have a trade on gold. I'm long gold. I'm looking at trail stops today. In fact, this might actually give me the chance to finally trail a stop loss on gold into profit. I'm looking at closing it or putting a stop just below here. So if I didn't have any trades on gold, the only things I would do, and I personally would be looking for this, right? Break and retest, or a pullback yet again into the lower end of this consolidation. But if I didn't have a trade on right now, there's nothing for me to do in this area. Now, you might have a different style than me, and that's totally cool. There's many ways to trade the markets profitably, and far more ways to trade the markets losing money. But in terms of what I'd be looking for, like I said, break and retest or a pullback into the lower end of consolidation. Both of these trades look pretty good to me. I am, like I said, my plan with gold today, if you guys are also in gold longs, my plan personally is I'm looking to take this stop loss that I've got, and I'm looking to move this guy into profit right around here. So if we get a closure that looks like it does right now, then this will be an opportunity for me to take my stop loss and trail it into profit. Lock something in on the trade in case we do get, some sort of sharp reversal. And look, I wouldn't put it past gold. Gold has been really choppy. I think, so I have a bullish position on gold right now, but I think it's also fair to acknowledge that the path of least resistance based on the daily chart would be, okay, we come back up here. There's a good chance sellers take a stab at it. Now, could it break out? Sure. But my opinion, how am I playing this? Again, I find it frustrating when traders on the internet will only ever kind of talk both sides. They'll say, oh, it could go up, it could go down. I find that frustrating. My opinion is I lean slightly bullish. I don't have like this huge conviction, oh, I think gold's just going to go to the moon, but I also want to, stay bullish and protect my risk. So my plan would be to take this stop, move it in. I don't know where gold's going to go next with certainty, right? I think that it could come up here and it could break out. But again, historically, it's been coming up to this level and finding resistance. So how am I going to play this? Well, I want to stay to see if I can catch that break. But if I don't, and the market reverses, then I will take a profit. Does that make sense? At the end of the day, I don't know if you guys have ever thought about this consciously, but I know I did when I was watching a lot of YouTubers like years and years ago before I created my own content. Well, actually, and today, I still watch a ton of trading content. I find it really frustrating when content creators that I watch do not share concrete trades that they're in or actions that they're taking in the market. I find that frustrating because then it's kind of like, you can talk both sides of everything. I could say gold could go up, gold could go down every single day, but I don't find that to be very useful or valuable content. Look, I'm going to be wrong in front of you guys. I've done it thousands of times at this point. I've done YouTube since 2018. There's times when I'm right, there's times when I'm wrong. I really don't care if you think I'm an idiot for being wrong, or it's great if you think I'm right. But the long story short is trading is all about making more than you lose, and you're going to lose. You're going to win, you're going to lose. The profitable traders out there are making slightly more than they lose, and they are grinding it out day in, day out. How many trades do I take in a month? Probably 15 is a good number. Between everything that 15 to 20. But I trade everything. I trade Forex, stocks, indices, commodities. I guess the only thing I don't really trade is crypto. I trade Bitcoin through the ETF IBIT, but that's about it. And Ethereum, ETHA. What's Ethereum doing today? Ethereum was up a lot this weekend. Ethereum still grinding higher. Look at this guy flying high. Really cool. Yeah, Ethereum is making a run for, looks like it wants to go to 4,000. Dogecoin also jumped a ton the last few days. Let's take a look at some currencies here for a second. Euro dollar pulled back to this area, 1.16. Found a little bit of support there. Pound dollar moved lower, tried to keep going. I have a short position on this one. Moved a little bit higher here. Dollar yen, like I said earlier, finding some rejection around this area. Most yen pairs here, to my understanding, are moving lower this morning on a stronger yen. Pound yen selling off a little bit. Euro yen, Australian dollar yen. You can see it a little bit better on like the 1 hour chart. Let's see euro yen finding a little bit of rejection here. The day traders probably watching this breakaway, right? Something like that. We'll see. Yen pairs moving pretty strongly here this morning. Let's take a look at the dollar index. Dollar index on the 4 hour chart, finding a little bit of rejection, it seems like, around this area here, this 98.80 to 99 range. Let's tighten up our zone just a little bit here. So we had a little bit of sell pressure come in on the dollar here, wicked up into this 99 proximity area, right? And then seeing a little bit of sell pressure, probably, playing a role in why gold is moving higher. What's my thoughts on the dollar yen? I'll give you just my dollar view overall because it's going to reflect in the Japanese yen as well. So if I take a look at our economic surprise meter really quick. So if I'm looking at the dollar, my view is still very neutral on the dollar. Like, I don't have a really strong bias one way or the other with USD pairs. If you're newer to the channel, what I'm looking at here is called the economic surprise meter. What it does, it's one of my favorite tools, especially obviously for currency trading, but it's probably my go-to tool for currency trading 101. What this shows you is it shows you essentially a scoreboard of currencies and their economic data respectively, whether it's outperforming expectations or underperforming expectations. It's kind of like, think of these as like sports teams for a second. It's kind of like if everybody, is disappointed or impressed by the teams that are outperforming what people thought they would do this season versus underperforming, right? Because this is not necessarily saying that the Swiss economy is the best economy. It's saying rather that the Swiss franc has been outperforming expectations here recently, and outperforming, what people thought the economic data for Switzerland would be. Same thing with New Zealand, right? And we can look under the hood in a second. An example here too would be the Canadian dollar has been underperforming what market expectations have been. What are we talking about? Market expectations? Well, there's a whole analyst community. There's a whole, in the finance world, right? There's tons of very smart people who try and make predictive calls on, jobs reports data for these various economies. Tons of people involved in trying to predict what certain economies, what their numbers are going to look like. What this table shows you is if you have the economic surprise meter, you get to look at, okay, according to all of their expectations, which economies are showing strength versus those expectations, or missing them completely. Like Canada has been missing expectations here. Europe has been actually exceeding expectations. So which currency is likely to be stronger? Euro, right? CAD is expected to be weaker based on this. This is my go-to. Like, I could use this. If I wanted to only trade currencies with one chart in the Edge Finder, this would be it. I would just use this and all I need, right? Because it simplifies everything. It just says, because the markets trade on expectations versus what happens. They don't trade necessarily on, I mean, that is the biggest thing. The market is expecting something and then something happens and it either exceeds that, misses it, or meets it. And what happens in that data, right? So if I go take a look at New Zealand, this is a more obvious example right now. New Zealand was expected to grow at 0.7% GDP growth. It came in at 0.8. That's good for the currency. Stronger growth, good for the currency. Another easy example would be, let's look at unemployment rate. Unemployment rate was expected to come in at 5.3%. What actually showed up was 5.1%. Lower unemployment, is that good or bad for the currency? If more people are employed and the consumer is getting paid and doing well, is that good for the economy? Yes. So that's bullish for the currency. Does this make sense? So that is the way to do it, right? Is to look at the forecasted data points versus the actual. So the economic surprise meter wraps it up into a gift basket and makes it really easy to look at. Which currencies are experiencing stronger than expected stats versus weaker than expected? Because here's the thing about fundamentals. Most people struggle with fundamentals because there's so much to look at, so much to go through. You need software in today's day and age to essentially speedline the process, right? Streamline the process. If you don't have a copy of the Edge Finder, it is 45% off right now for people who are watching the live stream. Send us a direct message if you are interested in getting a copy. You can speak directly to our support team who is standing by. We have real people on our team behind the scenes that help to set people up with the software, explain things further if you need it. We can do payment plans if you need to split it up. If you have any questions, I see David is asking about setting up a payment plan on the Edge Finder. If you have any questions, again, we have a support staff here at A1 that can help you with that. Just send us a direct message using this link, and you'll be connected to someone from our team who is specialized in setting people up with the Edge Finder and answering questions and setting up payment plans or etc. Just don't miss the sale because it is ending soon, and it is the biggest discount that we will be doing all year long. So don't miss it. So let's see. Taking a look here, Russell 2000. You guys know I got trailed out of this trade, so I'm watching with a little bit of a little bit of sorrow because I got stopped out here. I mean, I didn't take a loss. I took a really nice profit. I ended up taking along about 50 days ago. 55 days ago, ended up taking a profit. It was a really good trade, but obviously the natural frustration is when you get trailed out of something and it keeps going. But you can't really, I say that, but I can't change anything about that, right? I can't control what the Russell's going to do or the stock market index is going to do next. I have a rule set. I stuck to it. I trailed out, and sometimes the market keeps going without me. But if this market, rolls over, I may get the chance to rejoin the trade. Currently, if I take a look at the Edge Finder's top setups page, I'm just going to use the simplified view. I find this to be a lot easier to see on mobile devices. So if you're watching on a mobile, I feel like this is a little bit bigger, a little easier to see when you're watching along at home. So what I'm looking at here is the Edge Finder's top setups simplified view. So we've just, without going into all the nitty gritty about, everything about sentiment, technical reads, and economic scores, we're just getting a summarized view of everything. So currently the NASDAQ and the Russell are our top rated US indices. We're getting strong sentiment scores, technical scores, and economic data scores for these two indices. So if I take a look at the NASDAQ, for example, well, we're on the Russell. Let's talk about the Russell. What am I going to do with the Russell trade? Well, I do think we're a bit stretched, and I would like to see a bit of a correction, a little bit of a pullback here on the indices. We had some issues with the put to call ratio this weekend, so let me see if it's working. Possibly working, possibly. Yep, it's working. Nice. Put to call ratio has us at a situation in which we are now starting to see a little bit more of a tilt towards high demand for call options. So people are getting a little bit more euphoric here in this market. I also noticed this. If we take a look at the AAII Investor Sentiment Survey, this shows us a weekly filed report. Investors are asked, are you feeling bullish, neutral, or bearish in the next 6 months on the stock market? It's a really cool indicator. And what we've actually done is we've extrapolated it into even simpler. We can actually see bullish sentiment over time versus bearish sentiment over time. And what you'll see here is that what makes me a little bit cautious about getting heavy long into the indices at this time is that bullish sentiment has really risen in the last few months. We went from a situation in which bearish sentiment prevailed, right? We had super bearish sentiment. Everybody thought the market was going to crash. Now everybody thinks the market, well, not everybody. I should take that back. We're not seeing massive euphoria, but we've got a much less bearish crowd, right? We went from everyone was bearish to now much more mixed to neutral. So, I would like to see, to kind of balance this out, I would actually like to see the crowd sentiment get a little bit more negative, right? If we popped into like the 40 plus percent range in the AAII sentiment survey, that would actually get me more interested in getting long, especially if that coincided with a push lower, right? So what happens typically is when the market starts to drop, people start to get, bearish on it. And so there's a number of reasons. There's a number of things that could cause us to get more bearish, but we'll have to see. Do you think tariffs start 1st of August? We will see. Do you think if tariffs start the 1st of August, we will see the NASDAQ down like last time, 16K to 17K? Well, let's just pull up the NASDAQ because that was next on our list anyways. So if I'm looking at the NASDAQ, 16 to 17K, I think that's a far cry personally. I don't. Now, you can never say never in markets. We could see something crazy. We could see, Trump throwing the towel on something and get upset with something. Who knows, right? Nobody knows for certain. I don't have a on speed dial to Donald Trump, so I couldn't tell you what he's thinking next. But is it possible? Sure. Is it probable is the better question. Is it probable that we are going to see tariffs flare up again and that the market's going to do a free fall drop to 17 to 16K on the NASDAQ? I don't think so. I don't think so. I think that the path of least resistance for markets is higher. So I want to be clear. I think the NASDAQ keeps pushing. So Nick, why don't you buy it right now then? Well, because in trading, just because you think a direction, like I always think I have an idea of which direction the market's going to go, but I'm wrong sometimes. And so instead of me just saying, okay, I think the NASDAQ's going to go up, let me just buy it right now and just get heavy. What traders who have some experience in the markets, and when I say experience, I mean painful learned lessons. That's what I mean by experience. Tell me that I want to enter markets, right, when there is a favorable risk to reward. Now, when I talk about risk to reward, the easiest thing that I can point you to in terms of how do I know when it's a better risk to reward, the easiest thing is to look at sentiment. Sentiment is the risk to reward indicator. That is why it makes up 1/3 of what I do. Let me explain. I've said this 1,000 times on my channel, but in my trading, I use 3 pillars to determine if I want to take a trade long or short. I look at technical analysis, which everybody knows and retail traders love. Simple, support and resistance, market structure, pullbacks, trend structure, trend, all that stuff. It's great. However, it's also very overvalued by the retail trading community, in my personal opinion, because most traders do not even look at the rest, right? Most traders don't realize that there's also some wonderful insights that you can get from understanding the macro directional bias, the fundamentals, right? Is the economy looking strong? Are company earnings looking good? Is the Fed going to cut rates? Those things, those are the true movers of markets. So direction comes from fundamental analysis. Technical analysis plays the role of helping me to determine where my entry and my stop can go. That's it. Keep it simple. If the direction is up, I'm looking for pullbacks, find a technical area, I'll give it a shot here. Technicals have, in my view, not a ton of predictive power, right? They don't tell me, oh, the market's going to do this and it's going to turn at this exact pip or point or percent or whatever, right? Technicals don't have that a magical power that, many retail traders, that's why I say they're overvalued. People view technical analysis as some sort of magical way to determine when the market's going to go up and when it's going to go down perfectly. And I don't think that technical analysis really does that. Technical analysis is a simple process. For me, it's not a big component. But the final one that I wanted to discuss is sentiment analysis. This is where risk to reward comes into basis. If we know that the crowd is very bearish on something, to me, that is a more contrarian bullish signal. If everyone's kind of pig piled into shorts on something, the short squeeze, the move higher, gives you that really good risk to reward. You're right. So what I look for in my trading is a combination of all three of these things aligning. Now, what you might get ready for it, that's what the Edge Finder does. The Edge Finder looks at these things, and this is why the tool is very popular. It looks at sentiment, technicals, and economic data, and it looks for synergy. If it gets that synergy, it gives us a bullish or a bearish reading, respectively. Does that make sense? That is the utility of the Edge Finder. The Edge Finder does what I just discussed automatically. And so when I talk about all those things, the Edge Finder is generating those reports and ideas for me. That is the utility of the tool. Like I said, Edge Finder is 45% off for a limited time. Do not miss the chance to pick it up for a very low cost for a very limited time. Final thing I'll say on this before I pass it over to Mr. Ivan is we have the option to make this into a payment plan. We're doing that for people who need to split the payment into 3, but just don't miss the sale, because the sale right now is the biggest discount that we do all year long. So if you're like, oh, I know I want to get a copy of the Edge Finder, just take a second to send us a direct message here. Let us know that you want to take advantage of the sale. And if you can't afford the full thing today, we can split it up for you to make it more accessible so that you don't miss the discount. Anyways, that is all I've got for you guys. Up next, we have Mr. Ivan FX taking over the stream for a little bit. He specializes in currencies, but of course, we'll cover all sorts of different markets. Stick around with Ivan for a little bit. We'll also drop the link to his channel. If you enjoy his coverage, please do us a favor and subscribe to him on YouTube. You can also find him there for one-on-one coaching is something that he offers. Stay tuned. Up next, we got Ivan FX. We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
Hello, everyone. For those of you who were... Oh, I do apologize for that, actually. For those of you who were in the group yesterday, and those who are in Discord, we had our little weekly planning meeting yesterday, and I said that I would exit my dollar yen trade, the last part of it, and I got out at about 148 and a half and some change. I don't exactly know, but somewhere in this direction. So I'm gonna put it down a bit. So somewhere in the region of about 500 pips on that, and on the other ones, and about 300 on the first batch. So that's kind of my summer trading. And I'm not asking you to rate it, but at the same time, I also said something in the essence of, I don't know what's going to happen today or tomorrow, but my seasonality, and for whatever reason that might be, I'm seeing that potentially, for whatever the reason is, that we might get a shift. And what happened overnight, and I can't really explain it to you other than it happened. We haven't made a higher high. We have come down to 171 on euro yen, which is one of my favorite pairs. And we are threatening, if that makes sense, 172 to break. And that would be great. And I said that's probably going to make a downtrend to about 20th of August. That, for that matter, can be absolutely bogus. It might never happen. Or it might actually happen, and you might actually be very aware that if it does happen, it's it's probably time to reconsider your positions. Not financial advice whatsoever, but at least brought your attention. Now, this was last year. I don't think we're going to do another, I don't know, what was it, 2,000 pips? That's not necessarily what I'm saying we're going to do. But if we can get like some kind of peak to an extent, if we drop really fast that we did 1 year, and if the drop is about 500 pips or more in the next 7 days, that is more than anything else, more than good enough for me. So, hi, my name is Evan. I'm the Yen Man, and I do crazy things with yen, and it's probably boring, but I love it, and that's why you should love it too. Because why isn't it fun to trade something you don't really understand, but still understand it to the extent that nobody else understands it, but you become the expert because nobody else understands it. So I've done this for a long time, and I speak about seasonality, and I can't explain to you why money flow, why something would rise, why something would fall, why something would do what it does, other than it gets money in the bank. Um, my expertise and my interest is what makes money flow, what drives the market. And I've said that to you many times. And I'm going to say it many times again. And I said yesterday, what if Euro New Zealand comes down? Sorry, why if Euro New Zealand comes higher, makes a reversal, comes back, then continues at about 21st of July, about every year, that's a good buying opportunity for me. I can't tell you. I can't reason with you. I can't explain it to you. Other than, okay, that's about to happen. So, in my world of craziness, whatever happens in this market doesn't really matter. I'm trying to give you a bit of comfort because to many traders that I speak to, market is a bit random. It hits your stop loss all the time. It hits your entry all the time. It hits your take profit sometimes. And or for that matter, I had a trader in my DMs the other day, and he said, "Bruv, I made a lot of money on gold. Um, but I'm down 25%. Can you help me?" And like, dude, risk. What happened to your risk? I want you to trade with me for the next 10 years. Like, why are you risking so much money? Like, give me give me a chance to help you out. At least make your brain think, breathe, right? So right now, as of gold is trying to make a high, and again, uh, um, gold came down to the level I've been talking about, 3,200, and it's now some time ago. It still stand the test of time of what I'm telling you over time, that patience, 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 patience. Okay. The faster you want to trade, the faster you want money, the more ridiculous your trades are. That's not necessarily the same. The more spending you do in your trading, the faster you fall. All right. So for me, well, I can do Fast and Spinning. We can do that Fast and Spinning. We can do Fast and Furious too. But I can't. But I'm not faster than Chris Martin to break up relationships. So we need to take a chill here, okay? So let's start with dollar. I said before June, mostly in the mentorship course. Sorry, in the Discord group that we have. And for those who are wondering how that looks like, this is from yesterday. Gave you guys a bit of an update on it, but it's about 9:30 p.m. Oslo time, which is about it's 6:30 New York time or something. I have been consistently saying that in June that July is going to be a range bound. It's not going to do much, and it's probably a bit boring to hear that now. Well, Ivan, you told me that. Yeah, I told you that, and we haven't really been moving more than 3%, about 300 pips. That's fair enough. That's okay with me. We did fall, and we did rise, and we are kind of back to where we started about 15th of August, 15th of June, or 16th of June, 17th of June, and that's was my whole point of what are you going to do for July? Why do you do what you do, Ivan? And my reasoning behind everything that I do is past experiences. And I'm sorry to say that this came true. I really hate when something comes true and it's a boring come true, but we haven't really seen a lot of volatility. And I expected it, and I'm good with it. And the volatility that I expect to come back should be in August. And for that matter, 1st of August. And for that matter, last week of July. So I am like Michael Bublé popping back of my hole. I'm thinking, okay, what should we do now? I think the biggest thing that has happened in July, and no, that is not Trump and whatever has been happening around Jerome Powell, it has been the 2.7 CPI number. Okay. That should and can continue driving dollar demand. I also said yesterday, because kind of that's where I said the information first. Yesterday, I said that we haven't really seen the market pricing in a rate hike, or sorry, pricing in the new CPI information, or they have just not decided to take into consideration yet. We're still expecting about 2 rate cuts in this year, which I can see. I can see the reasoning. But yet again, in 9 days, we're still going to find FOMC, if this is going to be still being the pricing, we're still going to find FOMC and Jerome Powell still in the seat. He will still be very hawkish compared to what the market is. So, as I said, and I warned, and I made you aware that you might find some dollar bullishness coming in going forward if the market decides, oh, actually, Ivan is actually making a lot of sense here. Let's price in some bullishness going into. But if the current pricing in, and if we go lower than 98.50, if we are below 98.50 going into a FOMC, that is going to be a bullish situation. And that's probably going to be set up on a Monday. And by Wednesday, it's going to be long gone, and it's not going to be a market or a setup for you to take. Then that might even be the end of it. Like it happened about, when was the other meeting? That was about 18th of June. See, bullish kind of setup going into it. And then it kind of did a last hurrah on the FOMC, and then it kind of died out, right? So that's not necessarily a joker, but that's the potential going forward. And to be honest with you, there is also going to be there's going to be more tariffs talk again, like, oh, it's going to expire. He's going to give more tariffs to people. He's going to give more tariffs to, I don't know, Canada, Mexico, Europe, China, whoever, whatever. noise. Okay? Man, yes, you missed my absolute beautiful face. And my absolute fantastic intro. Man. It's almost memorable, almost memorable. So for me, that sends me up for a dollar bullishness situation. And with the market today is not very dollar bullish favorable. Well, I would argue that, okay, I said yesterday, I'm looking for dollar bullishness. I don't like it. And why do I not like it? Because I am kind of my brain, I'm and my mouth kind of always wants this setup here. This is low. Lucas says pound sign strong today. But yeah. And Bashi says, is price action not so great? Welcome to summer months. Like, Bashi, come on. You know me. This is about expectations. Now, and that's kind of, I really love that you say that, because that means that your price action eyes is working. And what's most important in that situation is actually take a glass of water and do nothing. All right. Yeah, it's your first training summer. Yeah. Good. Right. Take notes every day. Not necessarily every day, but for the summer, just summary. Probably by Friday. On Friday and this weekend, you have a summer summary. Of then you go through, what happened, and there's a lot of noise that has happened, but hasn't really made market trend. Haven't really made the market continue in a direction. That would be my first point. My second point is price action or volatility has been very slow and very low. What we thought was going to be, whoa, Powell was going to be out of office, where Trump came back and said, well, no, he's not going to go anywhere. Okay, we then collapsed the entire candle. For everyone who bought into that, and I would argue that those were at least in some loss, or maybe have lost something into it, that's not what we do. Okay? That's not what we do. And I say, and it might be cheesy, and I say big players or the hedge funds goes on vacation. Europe goes on vacation, and it's bots, it's machines that is operating within certain parameters. And I almost think that there is like a collective agreement. Not quote me on this, but I feel like there's a collective agreement among those machines learning people, input people, that we're not going to draw a market more than 3%, just for the fun of it. Like, okay, we're just going to have fun, No, sorry, we're not going to have fun. But what has been fun, and I don't know if I've expected it per se, is Bitcoin has had a very nice summer month. Very nice July. And I can't take any credit for that. Because I previously said I think we're gonna go down to 92 or whatever, and then go higher. So a bit lower and then higher, as you can see here from my absolutely fantastic drawing. We did. We just didn't go as deep as I thought. Okay, so what do you do now? Okay, hold on for dear life or whatever it is. Do you mention it's good to pause trading in July? Can you explain why? Min, you are such a gentleman. You know that, right? I love you for that. This in particularly. And more importantly, this. Does this look like a trend? Does this look like a trend? And overall, it does probably look like a trend. But what generally has happened to me, and this is painful to talk about, is during July when I came out of school, it never hit my take profit. Always back to break even. Always back to hovering just above the stop loss. I'm just paying swaps, man. And I started to think, because everything I do I have to analyze, right? So I'm like wondering, what am I doing? Why am I doing so? What makes me do so? Because I think that the market's open 24 hours, 365 days a year. And I thought, great. That should be great trading, right? No. There is times of year that there is open markets, but there's less volatility. We don't have a trend. We don't make a new higher high. We don't make a new lower low compared to the 15th of June or whatever 16th of June price, and probably 18th because of that's the FOMC meeting. From the last FOMC meeting, and we did make a high. But we have also come down. So we haven't really done much. We haven't really done a lot of damage. And I said before July, we might have a nice trend retrospectively. But then during, very difficult and very frustrating. And that's why it's so slow. It's worse than you can literally go out and paint the house and come back, and the market still hasn't moved in your direction. Even Trump doesn't have the conjoints to fire Powell cause that much chaos in the markets. He didn't, and he don't, and he can't. And the funny part that I said yesterday is that he said it was an embarrassing appointment of Jerome Powell. He was the one that appointed Powell. Okay. Make it make sense. Okay. So that's kind of the world we're living in, I feel like, right? I mean, somehow like this kind of price action where I can make profits again in the time zone. Yeah, we are a bit different there, and I love you for that. Don't worry. But for me, it's well, not necessarily too slow. It's just unpredictable, right? Where are we going actually? For example, if you say this price action is, to me, almost impossible to catch. This didn't come back to where the level I wanted it to be if I were to sell it, and if I'm to buy this when I'm, not that I'm buying it, but it's kind of more like a range, top of the range now. And then if we start trending, yeah, sure, I can take it, but that's not pullbacks. So I still have the same requirement for pullbacks and price action, and it's become sloppy in the summer. That it's kind of like if you are disciplined to your craft, you won't find trade setups, and that's very frustrating. It's very frustrating, right? Abdurrahman, yes, I can see your comment. And I did see that you asked about the wicks, but it's also filtered through my eyes and into my brain and into my ears, and it goes into a queue of things I need to go through. Okay. Lee says Trump is inconsistent. There is not even a consistency in that consistency because I'm never going to get back into America. I know that ICE is going to find all the memes on my phone. And even this, but Sorry, Trump. Sorry, President. Um, um, there might be still logic to the madness. I have to say that. Okay, let's get back to trading. Okay, so for me, I would argue that shorting New Zealand dollar, US dollar is probably my best guess. Given the nature of it falling about this time of year, dollar strength, we are very low. I really wanted to be up there. You know, it is what it is, right? Um, as I mentioned, I got out of my dollar yen trade yesterday. The other half of it, at 148.50. I don't know how many days I was in it even, because somebody counted for me. Count. There we go. 38 days. Okay, fair enough. If that's not patience, I don't know what is. Somebody says, what is my average trading losses? I normally hold a losing trade for about a day on average, and I hold a winning trade in about a month, or more or less. That means that there is some there that is more than a month. And when you get closer to December, I'm more like 3 months. If you look at single trades, I can look at 2 to 3 months on a single trade. But then they're also getting eaten up by all my small losses. So whatever that is. It's very hard to find setups. Yeah, so I just gave you one, right? New Zealand dollar, US dollar, if that fancies you, right? Then I've said if yen pairs collapses, turns around, okay? So there's a whole basket of yen pairs, okay? There's euro, the Swissy, not that I'm going to trade that. CAD yen, oh, has a new lower low, okay? Does it fit? New Zealand yen, does it fit? Dollar yen, not yet. Pound yen, not yet. CAD yen, that's it. Aussie yen, yeah, okay, we're getting somewhere. You can arguably say that's the first sell, but that's not in my mind. I'm just saying. You can arguably say that's the new lower low. And we are coming into the brand new lower low, which becomes the number 2 trade, arguably. That's good enough for me. This can, I'm not going to say it will, but this, for whatever reason that is internal to Japan, this can fall quickly, or like it did last year, and then it can turn around on you, go higher again. This is a counter trend trade until mid-August if nothing else happens. And what do I say that is, if we have like something that makes it fall 500 pips in a day or two or a minute, then everything is scooped up. So if you take any positions in this area, you need to have your profit and stop losses on. Not friends and advice whatsoever. You do you, but I have to. Second of all, is that I want to buy in pairs averagely, generally. It's just that I can't buy now. It's not really a very viable buying opportunity to buy the highest high every day all the time. So that's kind of why I look forward to seasonality include this one to come lower. And of course there was a pullback. There was a big gap yesterday. Came back higher, could have sold it, and then I would have now been 50 pips in profit. But I'm like, it's not my style to violate myself like that. So So I'll just wait for a new lower low. It's more than enough for me. And I can use that as a stop loss instead. Because that has its own risk, and this has its own risk more than anything else. Risk calculation, which is still high. And if I make a new lower low, I can manage my risk a bit better than to have my stop loss, I don't know, through the roof. Yeah, 50, 60, 70 pips, 100 pips, or something like that. So yeah, good. So I'm still waiting on this. This is still a wait. Could happen in the next hour. Somebody requested pound Aussie, and that was not the available one. Okay. So I guess I will be informed, Chandler. There we go. Was it pound Aussie you asked for? Mr. Edward? Yes. You got a long setup. Okay. I mean, congrats. Okay, I'm not going to be sarcastic. Edward Mwangi. Eddie. Okay. 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 This is not financial advice whatsoever, but what I'm going to say next is I hope and I pray together with you that you find much better setups and assets and trends than having the same price since April. You have to be way better at spotting weak and strong currencies against each other instead of weak and weak or strong and strong against each other, because you're supposed to trend, you're supposed to move, you're supposed to, So this to me speaks volumes. It's 500 pips. Okay, range may be you, but I really want you to have 1,000, 2,000, 3,000 pip strong trades and 500 range. If it comes back to the same level by at 205, okay, that can work for some time. But I really want you to have more than that. I want you to succeed more than that. So yeah. So for those who are thinking like this market, this summer is boring, this crazy, this is not for me, I can't find anything, I don't understand, it's because you're doing an amazing job. It's because you're doing the right thing. It's because you're listening to the great Ivan. Not really. It's because your process is working. And there is nothing more that brings me sadness in my life than to hear you pushing trades out and you lose and you lose and you lose and you lose and you're frustrated, because this time of year is time you will get frustrated. And what's the gain? What's the gain? Nothing. Well, knowledge that you won't do this again. But is that the way you're going to learn that this was a painful experience, that July is going to be such a place that you're going to hate, that July is going to be such a time that whenever you feel like you're just going to tremble because it only causes you pain. Trading is not about pain. Trading is about joy. It's about happiness. It's about laughter. But it's also about acknowledging that you are at the best at the moment and you have done your best so far. And if you don't find any trade setups, that is not at all that is not at all a view of you as a trader. That is actually the opposite. It actually means that you have done a fantastic good job. Hello, Sean. Yeah, okay, cool. That's for me. I don't know why I felt like going into the group in the last minute, but looking for your New Zealand buys, looking for a yen pair short, got out of my dollar yen trade. And you know what? I love you guys. And I'll see you soon. Boom.
If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello. Oops, need to share screen. How is everyone? Happy Monday. Hope you're all, I hope you all did enjoy your weekends. Hold on, let me make sure I've got the right screen here. There we go, cool. So, yeah, there's not really that much going on. So I think Ivan said something really interesting there. If you're struggling to find trades, you're pretty much doing the right thing. And I think that was a very insightful, very true thing, actually. You know, I haven't really done anything. I'm still in my euro pound trade that just isn't moving. It's been range bound here, pop to the upside, range bound, pop, range bound. So nothing really to do on there. New Zealand yen, still in this trade. However, we did have cooler inflation this morning, or depending on where you are, last night, this morning. So yeah, we took a bit of a hit on the open P&L on this position, but overall still in profit from the initial position and the scaling. So I'm going to leave that open for now. I'm still quite confident in the yen weakness in the sort of short to medium term. Sean, don't be rude, Sean. I'll ask them to ban you again. I'm only joking. Kwang, how you doing, my friend? Lee, good to see you as well. Easier said than done, though, having my rules written down in front of me, forcing me to stop if I need to. Yeah, I mean, you know what, Sean, Lee, I had a nightmare this morning. Well, not a nightmare, it's probably not the right word. I had one of those trades where you sit and you can't quite believe what just happened. So, as some of you might know, I'm currently trading or currently testing, sort of sampling a short-term mechanical strategy, because my day-to-day stuff is all very macro-based, so very slow, swing trading, boring stuff. So I've been looking sort of in free time, been looking at something like this, which essentially is derived from Tom Hugo's strategy. So anyway, I saw this daily pivot and I was like, you know what? This looks like a good place to buy. So I went down in the 5 minute, I saw a rejection. I was like, you know what? Let's jump in. Anyway, my buy positions were here. So bought into NASDAQ and then missed all of this because I had to close out because I was getting ready to come on stream. So I'm not in the best of moods, to be quite honest with you, but it is what it is. You know, it wasn't, I think I missed out on probably like $30 on that whole move. So it wasn't a big deal. It was more just the principle. Anyway, let's move on to the markets. So I'm a bit mixed on oil. I was quite bullish actually over the weekend. However, coming back to the markets with a fresh head this morning, I'm not sure I still am. So the contradiction really comes from price action. So, I mean, we're on a very, very clear downtrend here on oil. I don't think anyone could really argue that. We did see some buyers step in. We saw a very, very quick sell-off, and now we have failed multiple times to break above our 200 moving average, which is this big white line here. So that tells me the buyers are just not strong enough. We're not seeing the momentum and we're not seeing the follow through to really give me a solid entry. But on the other hand, we do have oil right here with a bullish reading of 6. And this is a little tip for anyone that does have the edge finder or is thinking about it. It's a great way to filter trades. So without the edge finder, I might have actually been looking to sell, and maybe that could work. I'm not saying obviously that's a terrible trade idea because I don't really know much about oil, I'll be completely honest. But already that's filtered out a trade that I might not want to be in if the technicals are looking very bearish. but the current macro landscape is leaning more bullish. It puts me in a position where I can't really do anything just yet. Maybe if we come down towards 60.6 or 50, what's that? 55.6, maybe then. But yeah, right now I can't do anything on oil. Gold's having a pretty nice push. However, we are still within this sideways mess. So, you know, I've been saying it for a while over the past couple of weeks that I'm not really leaning either way on gold, because I just can't justify being a buyer or a seller right now. And I think that is backed up by price action. So I mentioned it in my Sunday watch list video yesterday, that it seems like this market really is just waiting for the next kick. It needs something to drive it either way, because at the moment, again, you can make arguments to be a buyer or a seller. In my view, this is a market that is very discretional in terms of the drivers, because, you know, you could be sat on the rate cut side, or you could be sat on the rate hold side. You could say everything's priced in. You could say that things are still a bit escalated. There are still tensions there. You could say central banks are still buying. You know, there's arguments either way at the moment for gold. And I think that is reflected very, very accurately in the price action. So for me, yeah, I can't really get on board being a buyer or a seller. What would change that, however, is if we obviously either got a development in the macro or the geopolitical landscape, whether that be an escalation in war, whether rate cuts become a lot more prominent or a lot more assured, maybe is the word. Or even if we just get a very, very simple break and retest of these highs, again, that would be a very simple way to get in. So that's the current view on gold. I am sort of ignoring the chat. I do apologize. Chandler wouldn't do that. No, Chandler's lovely. Do I need a psychology session with Bashi? You know what? Trading low time frames has reminded me why I hate low time frames. It's interesting because it's like a world that I've just never paid any attention to. So, you know, I find myself looking at individual candles and like micro analyzing candles, which I've always said is kind of useless. However, I've fallen into it, and it is a little bit addictive. You know, when you see on social media, you've got those primarily ICT traders that have drawings of patterns and notes and stuff. I always thought that was really, really stupid. And I've got to say, I kind of get it now. I understand. So, you know, I'm willing to hold my hands up and say I may have been wrong. But I think that's what makes a good trader, isn't it? It's being able to understand different aspects and admit when you may have been on the wrong idea. Anyway, Edward, hello, good to see you. James, out of any G7 countries, who will hike rate first apart from Japan? That's a really interesting question. Actually, let me just quickly start. Let me hold on. I don't want to leak my my selfies for thumbnails. Just while you brought that up, I'm going to show you this really quickly. So this is from the 18th of July. It's from Credit Agricole, and it's basically what you just said, apart from Japan. Japan, I'm not going to read all this, but essentially what it says is Japan cannot hike rates, which is also what I've been saying, that the data for Japan is just, they can't hike rates, essentially. So Japan's stuck, which again, it flattens my yen bullish idea that I had at the start of this year. Okay, so which one could hike? Well, we've got a couple of ways to do this. So let's have a look on the Edge Finder. Because as far as I'm really concerned, all of them are pretty much just wait and see. So where are we at? We need interest rates, interest rate projections. And then let's have a look. So let's add the Aussie, let's add the CAD, SMB, and let's add the RBA as well. Hold on, let's give it a minute. So none of them look like they're going to hike. I mean, that's a given. We're in a rate cutting, what do we call it? A rate cutting cycle, essentially globally. However, which one would cut the least really is the big question. So obviously yen. So the S&B might hold rates steady until Q2 next year. Something to keep in mind. The Fed, I'm still very mixed on the Fed. I would say the Fed is a big question mark. July, in my book, is completely written off. That's not going to happen. That's just going to be a hold. Although Waller seems to disagree, but what does Waller know? But yeah, I mean, to be honest, hike first. I would say maybe the Bank of England, but that is a complete shot in the dark. I really don't know, unfortunately. We'll have to just wait and see what the data tells us, really. Hello, James. Any thoughts on gold? You've just missed it, Yusuf. We did just discuss gold. Just to quickly recap it for you, though, buddy. Essentially, I can't do anything because we're stuck in a sideways range. So being a buyer or a seller in this market is tricky because essentially the market's playing ping pong. We go up, we come down, we go up, we come down. There's no defined range at the moment. Obviously, we do have a long-term range or higher time frame trend, but right now for speculative short-term swing trading, like the majority of us do, is very difficult really to get an entry here, or a trend-based entry, shall we say. And finally, there is an argument to be a buyer and a seller at the moment in gold as far as I'm concerned. So yeah, can't really do much. Now, dollar ZAR. ZAR is not even in my vocabulary. I do not trade ZAR. I don't think I've ever really looked at the ZAR. However, I did see it. Yeah, I did see it here on the Edge Finder. And I see it quite often. It pops up bullish, bearish, and I just always ignore it. But I thought, you know what? Let's just take a look at dollar ZAR. And I actually quite like it because, similar to gold, actually, it's pretty much just a sideways market, and it has been since 2022. So if the fundamentals are bullish, and again, this is very, very surface level. This definitely isn't enough to take a trade. But if the Edge Finder is bullish, and we are in a trending market, and we are essentially almost at the bottom of this, the range market. Sorry, I keep getting the words range and trend mixed up. If we are at the bottom of this ranging market, maybe just buying it actually is a pretty easy, straightforward idea. However, it might be a bit too easy. So I'm just waiting because the dollar is down. The dollar is not having a good start to the week, but it's Monday. Monday often is, or sometimes is referred to as the day that forms the wick before the continuation in the opposite direction. So I generally take Monday's price action very, very loosely. But yeah, if we can see the ZAR either start to pick up from the current level or come down towards 17.26, which would also be the bottom of this Bollinger Band, I think that would be quite a nice place to pick it up. And also, if you are a bull on the dollar, it might be a good option because essentially what you could in theory do is hold on to dollar ZAR and obviously then expecting that ride to the upside on the dollar. But again, that depends if you are a bull or a bear. Copper, we spoke about copper and silver. Did we speak about this last week? I can't remember if we spoke about it last week or it was my video. But either way, copper and silver are pretty much in the same price action, what do you call it? Like the same price action classification, if you will, in terms of they're both a little bit too high for me to be willingly a buyer. So I'd need to see a pullback into these previous daily highs and then a continuation to the upside. We already know that the move that we saw here, this aggressive daily candle, was driven by tariffs. So it wouldn't be a surprise to me if we maybe see a correction again into these previous daily highs, then I could look to be a buyer. But until then, there is nothing here. And actually, again, I heard Ivan mention, is it Ivan? I think there's a D at the end of his name. I do apologize if that's wrong, though. Either way, I think this Aussie US dollar short idea is very, very good. The only thing that gives me the spooks just slightly is this 200 moving average on the daily. We can see this has been respected previously, slightly here as well. So being a seller right into that, it's a little bit of a tricky spot to be in. But if we can come back into these previous highs, or we can just sort of stay within this range for a little while, I'd be quite happy to start selling at that point. Will you do any more prop challenges? No. Why not live on your channel? I don't know. I've not been live on my channel in a long time, actually. I'm trying to find a reason to go live, I'll be honest, because the issue I found really was that I didn't have anything to talk about. So I'd be live on my channel. I'd also do my Sunday videos. Then I go straight onto Nick's channel more often than not. And each 3 times I'd be talking about the same things. It's just what I'm looking at and what I think. So I'm repeating myself, 5-6 times a week. So I just didn't see the value in me being live on my channel. But now I'm starting to build this short-term strategy. Maybe I could do some live trading on my channel. But no, I'm not doing another prop challenge. That was taken out of context. And it seems that I've tried to do entertaining things before and it's backfired. So to be honest, I'm just not interested anymore because I don't need to do it. I did it because I wanted to and I thought it was fun. But yeah, the enjoyment's been taken away from me. I know it sounds a little bit like a victim thing, but it's the truth. So that's that. Anyway, euro dollar. Upside seems to have topped, to be quite honest with you. And I was looking at this this weekend just gone, and the price action is very typical, it seems. You can also go back. I'm fairly sure it repeats actually quite often with euro dollar, where we have, and it might even be other markets, I'm not sure. It's just I noticed it specifically on this market, where we have upside, and we quite often touch this Bollinger, pull back, continue higher, and then range for a period of time. Then we have that continuation to the downside. Same thing here. We touch the Bollinger, pull back, continue higher, range, and then push to the downside. Same thing here. Push up to the Bollinger, pull back, push higher. Are we going to get this next range bound? Maybe. If we can start seeing euro dollar range here, I'm going to start stacking some shorts in anticipation for this next drop. And this is more of, I guess you'd call it a pattern. It's just a pattern play. But of course, I would need the economics to back up the idea. I'm not going to blindly start selling because of 2 previous runs. But yeah, there you go. Heavy buys on dollar ZAR, AACA. Love to hear that, my friend. If we've got similar ideas, yeah, great. Hold on, it's not dollar ZAR, is it? Dollar ZAR is here. Yeah, I do like it, but it's just one of those things. I'm a very, very, what's the right wording for this? I'm very boring, I guess. I don't like to sway away from markets that I don't normally trade. So like dollars are copper, oil. I'm quite happy to look at them and know the baseline fundamentals. But beyond that, I just don't really pay attention. And it's more of a bad habit than from intention. But yeah, I think dollars are definitely on the list for me to learn a little bit more about, or specifically the South African rand is more on the list for me to be a bit more educated in. Pound dollar, same thing really with euro dollar. I'm looking for some sort of range to develop here. And then I will be looking to go short once we get the catalyst. So the catalyst could be, likely at this point, it would be a positive NFP print. So obviously we had jolts, we've had NFP, we had lower unemployment, we've had sticky CPI. PPI came down slightly, but in my view, that's not enough to warrant a rate cut in July. So we can see either similar data or better data in September. I think that would be the point where I'm like, okay, I'm going full margin dollar. I'm gonna Lambo or homeless dollar longs. Of course, that's a joke. Did I see ETH? I've not seen ETH, but I have heard about it on, I think it was TikTok, actually. Yeah, crazy run. Actually, one of my, I want to call him a friend, but I don't think I've ever actually spoken to him in person, one-on-one. Royal Trades is in this chat sometimes. I don't think he's here today, but yeah, I saw him on Twitter. I think he's been long on ETH since about 2,100, roughly. So yeah, it's had a very, very impressive run. And to be honest, I'll be a little bit cautious now into these highs. But yeah, I mean, anyone that caught this it was a fantastic trade. I mean, it's done very, very, it's like, oh yeah, I mean, this is the price action of dreams, really. I mean, it came back down to a very, very stable support level here on the daily. We rejected the Bollinger and just rallied from there. It was beautiful, but I don't trade crypto. So unfortunately, wasn't even on my radar when that was happening. NASDAQ printing new all-time highs. So the idea remains the same, similar to what were we talking about? Oh, it was Swiss yen, but I didn't get there actually. Swiss yen's got the same theory, really. So I'm looking to looking to buy if we can come back into previous all-time highs, retest, and then obviously look for that continuation. Word on the street, I think I've said this I think last week. Word on the street is that we're due a 10% pullback, which would be amazing. Whether we get that or not, who knows? Who knows? But again, the catalyst for that could be better dollar data. So, for example, if we get higher inflation, chances for the September rate cut start getting slashed, could be that catalyst for NAS, the Dow, and the S&P to have that 10% correction that people seem to be talking about at the moment. With yen pairs starting to get with yen starting to get a little bit of strength, we're seeing yen pairs start to have a little bit of a pullback here. Whether it's going to be enough to give me an entry on Swiss yen, it might be a bit hopeful. I mean, this is a daily chart, so I'm expecting a bit much there. So we'll see. Euro CAD. We were looking at Euro CAD last week. I think Nick's in Euro CAD actually as well, but I'm not 100% sure. But yeah, hold on. This was on the Edge Finder. Is it still there? It is, but it's only a score of 5. I think this is wide and take it. So my rule for the Edge Finder, again, it's a little bit of a tip for anyone that does have it or is thinking about it. I don't pay attention to anything less than a 6, really. It's just because 5 in my book is too easily swayed back to neutral. And same thing for -5 as well. So for example, if I was long dollar CAD and we get a negative tick here in COT, or retail positioning in flips and we get then -1, the Euro CAD Edge Finder reading is then going to flip neutral, and that is, again, that's a complete no-go for me in a trade. So normally I avoid it, which is why I didn't put too much weight on long Euro CAD. But I do like this price action. I mean, we've rejected the previous high quite nicely. The only thing is I would love to see a pullback into the lows at 1.55. Then we could come and meet this 200 moving average, and then the trifecta would be there. Or not trifecta, probably wasn't the right word, but yeah, the layers would be there. Mido, when to sell gold? You can sell gold when you either have the capital, when your broker unlocks the sell button. Pretty much the only 2 requirements you've got. Check Exxon stock. Exxon. Actually, speaking of stocks, I'm going to show you one in a moment. Actually, I'm just waiting on my guy to get back to me. Has he done that? No. I'll move on to that in a second. Exxon stock. I mean, I don't know. Is this bullish? Is this bearish? Obviously, I'm not talking about the price action. I'm talking about the stock itself. Is it a good stock or not? I've got no idea. I might have to get this stock box from Nick. I wonder if I use my own affiliate code, do I get my own discount, and do I also get my own rebate for buying the stock box? Is that the method? Gold. Sorry, I'm going way off track here. Dollar Swiss. We'll move on to dollar Swiss in a second. Gold has been killing my patience. Yeah, gold. For anyone that's been holding gold, you have my respect, because I couldn't do that. I would not have been able to hold any position in this because it would just be a nightmare. Don't know, James. No setups anywhere I've moved to stocks. Well, I've just liquidated my trading 212 account. I've moved over to Interactive Brokers. I wonder, just bear with me for a second. I wonder if I can show you my performance. I don't know if you're going to be able to see this. Can you guys see this? So in the past 3 months, 41%, which is £1,000 gain, which wasn't bad. I'm not a stock trader, bear in mind, so I didn't put much in it. Like I said, withdrew to put it into IBKR, or Interactive Brokers. And what was the 2 main stocks, or the 3 actually, was BBAI. So BBAI was a huge, this one, it gave me like a 70% return. I bought it like down here, roughly. The other 2 that I'm looking to get back into, I had to sell my positions to move over, was ASTS. So I'm just waiting for a pullback there, and QuantumScape Corporation as well. So I bought on this pretty much around this orange line, give or take. I think it was around there. So they're on my watch list in terms of stocks. But again, I don't know anything about them. They're not mine. I'm just waiting to get back into them. So please do not take that as me trying to say I'm this crazy stock trader. I'm not. I don't touch them. I just follow what my friend says, and I seem to do quite well. Am I using Teamer? I don't know what Teamer is. I don't know if that's a really common terminology or if I'm just dumb. I don't know. Anyway, Nasdaq, Russell. I think I've missed Russell. Again, it's not something I really look at ever, so I'm not sure really if there's anything here. However, actually, it does look pretty good. So Russell, very bullish, score of 9. I think Nick's already in this again. I'm always a step behind Nick. It's starting to annoy me a little bit. Maybe I should just join Nick's signals and just not even bother trading anymore. Anyway, if we could get a pullback into, let's say, for argument's sake, or just to keep it simple, let's say 2200. That would be good. So if we could pull back, meet this 200 and this 50, and then I could look to go long. So we've got the moving average cross, and I always say this when I mention this, because when I say moving average cross, it seems to get lost in translation a little bit. And when I say moving average cross, I'm not looking to buy just because of moving average cross. What I use the cross for is just to tell me, or just to indicate that the trend has changed. So in this situation, we can see the 200 is above the 50, indicating the trend is bearish. In this case, the 200 is below the 50 now, indicating the trend is bullish. And that's just a very, very simple filter that I've used for a long time. Actually, it's just a way to automatically say, is the market bullish? Is it bearish? Okay, how can I look for a position? And that's it. It's a smoothing type, triple exponential moving average. So the answer is no. I smoothed my 8, 14, 50, and 200 using Teamer. It's goated, is it? I'll have a Google after the stream, because again, I have no idea, absolutely no clue. I'm just trying to think if there's anything going on that I should mention, because there's no Chris Pulver anymore. Oh, there's no Chris Pulver regularly anymore, I should say. So I think I'm the last one today. I am the last one today. So if there's any questions, let me know. If not, then I'll call it a day, and I will probably go and get some rope in a chair, because NASDAQ has made me very, very sad, because I'm just watching it on my over monitor and it's just going even higher. So upset. I'm just so sad. You know, I bought it right here. I caught pretty much the bottom, and I closed it pretty much at the bottom. It's just so sad. Oh, it is fine. You know, it's one of those things, but it's painful. Embrace the pain, but also a little bit sad. Please, bro, would love to know your thoughts. Oh, yeah, absolutely. I'll add it to the list. NASDAQ's a skyrocket or rocket ship. It is. It's not good. Chris is not going to be joining anymore, or just joining for today. So from what I was told, Chris is not going to be as regular from what I understand. So normally the schedule was, typically I would come Wednesday, Thursday, Friday. Tuesday, Wednesday, Thursday. I would normally have an hour, then it would go to Chris. But I think, again, just from what I understood, I think Chris is got some other commitments now. So Chris will still come on, but I just think it's not as regular than, or at least not every day like he previously was. Embrace your instinct. It wasn't about instinct, Joe. That's the worst thing. I would have happily have held it, but I needed to close it and you know, get ready to come on stream. So it was one of those things. Chris's work schedule got moved around, so Chris will come on for more special days. Okay, there we go. We got word from the horse's mouth there. I hope the word from the horse's mouth is a saying in America, because if not, that probably just sounds like a cold Trader Nick a horse. I'm gonna assume it is. I've heard that around. Anyway, I think that's pretty much it. Doesn't seem like there's any questions. the horse. Don't blame Nick's stream for your weakness. You know what, Sean? I'm going to send you an invoice for your rudeness today. Before going, can you give advice for new traders? Legally, I'm going to be pedantic here because I want to stay out of trouble. I cannot give you advice, but I can give you my experience, and then maybe you can take something away from that. So, from my experience, the best way to start trading, or the best method for new traders, is stay the hell away from low time frames. Once you get a bit more competent, your emotions are in check, you've got some capital behind you, sure, go to low time frames. So 1, stay away from 15-minute minus. So stay away from any market that's 50 or any time frame lower than 15 minutes. And it's not because it's not tradable really, but it's much more difficult for especially new traders. I mean, I've been trading for a long time. I am finding it difficult to move over to adapt to a low time frame because you've got to make decisions very quickly. Your 1% stop loss that might take a week to get hit normally on a swing trade gets hit within minutes. So that can be a little bit mentally taxing, and it's very easy to lose 2, 3, 4% in a day. So your losses are going to mount up much quicker potentially. The volatility is obviously much higher. So yeah, anyway, and you're much more price action based. So it's going to be a lot harder to find an edge. So that's the time frame tip. Obviously, you know, you've got the very typical backtest demo trade, you know, all that stuff. It's boring, I know. You don't make money, I know, but that is the backbone behind trading. You know, again, I've been trading for many, many years, and I'm going to show you this because I want you to understand how important it is. Is it Google Slides? That's the thing, isn't it? Just bear with me for a second. Let me show you something. I don't know if it's on the right one. Yeah, it is. It's here. So this is what I've been doing in my spare time. So I'm collecting data. So it's just the setup and then just screenshots. And I've started from the 2nd of January this year, and I've still not finished. I want to do it up until basically where we are, current date. And the goal is to then scan through all of these images and try and find some sort of theme. So, okay, I can say, let's say Thursday, or again, this is completely hypothetical, so don't take this as real data. But let's say every Thursday, or the majority of Thursdays, we often have this London range candle form within. And then on the 4th candle, we often break out at least 2%. Again, hypothetical data, do not take that seriously. But then I can go and back test that data and say, okay, yes, this happens, but my average drawdown on my MAE is normally 2% or 1.5%. So I need to adapt to that. So that, again, I'm not going to go into that too much because that's a very wide topic, but hopefully you get what I'm saying. It's important. It's boring. It's slow. It's monotonous. It's tedious. I get it, but it's very important, especially again, if you are doing a price action strategy, it's imperative. If you're more of a macro trader like me, like Nick, like I think Ivan, and a lot of the other guests that come on here, I'm going to say that backtesting is not as important. I would say it's still important. You still need to understand the market behaviors and the moves and how to get in and out, fine. But it's obviously then more of a focus on, okay, how does inflation affect central bank interest rates? How does the labor market affect inflation? How does that affect interest rates? Blah, blah, blah. So, of course, understanding of market. So there's that. Then there's, of course, capital. So this one is live trading is also great, which is something I'm doing now. OT, that was what the NASDAQ trade was, some live trading. Anyway, capital. A lot of new traders will go on social media. They'll see anyone. The majority of content creators that are also traders are showing massive numbers. It's numbers that I don't even have. You know, I'm not making thousands on a single trade. I'm quite happy to admit that because, you know, I'm human. We're all on a very similar path. Oh, sorry. We've all got very similar goals, but different paths. So do not get caught up in the idea that if you're not making $5,000 in a trade, you're a bad trader, because that's not the case. You just need to make your way, you know, get a job, get a prop firm if you need to, or if that's the way you want to go. Anything, just build your capital, take it slow. Don't try and flip your accounts because it's not going to work. I'm just trying to think if there's anything else, because I don't really think there is. Also, I guess the last thing I'll say is there is always a trade. So what I mean by that is don't get FOMO, because there is always the next trade. So let's say you have a bad day. So like me, I've had a terrible day on NASDAQ. Not because it was a losing trade, because it was one of the trades that could have been massive. It would have probably been my biggest trade in terms of like risk to reward. That would have been huge, but I effed it up. But it's cool. There's always tomorrow. There's always the day after. There's always next week. There's next month. The markets don't stop other than the weekends and market close. There's always the next trade that you can take. So don't get FOMO. Don't get emotional. It's all good. It's just pixels on the screen at the end of the day. Obviously, it's slightly deeper than that, but hopefully you get the idea. As in Ines, I apologize if I got your name wrong. But yeah, invest small if you're new, because you will lose money. I can guarantee you're going to lose money in the first 6 months to 1 year. At least you're going to lose money. I lost my life savings within my first, well, actually, I did it in 24 hours, but that was within my first year of trading. I lost everything. So yeah, just be prepared. I'm in my first 3 years now, but have solid strat, still invest low amounts due to me going in circles for the first 2 years. Spoken about, yeah, I mean, that's the way. Actually, I've got one last point. I know I've already said that twice, I think, but last point is invest in education. And what I mean by that, I'm not selling you anything. I'm not here to do anything. I'm just saying that a big problem that I see with retail is they will fund an account, they'll buy a prop firm, and they'll trade and they'll lose money. They'll blow the prop account, whatever it is, they'll just continue to trade and lose money. And then they'll get to a point where they're like, okay, this isn't working. I've got $20 left in my bank account. I don't get paid for another month. This isn't working. I've just lost X amount of money. I need to learn. But then no one will teach them because they've got no money to pay, which is, completely valid. I mean, who would take time out of the day to teach some random guy on social media? I wouldn't. So obviously paying for education, or at least investing in education, is an incredible thing to do. I think the majority of traders have either paid for a mentor, or they have found someone like Trader Dante, Trader Tom, Trader Nick. I don't know, Tom Dante, I think his name. Someone, just anyone that can teach you the way you want to trade, but also teach you the real way of going about that. Not, here's how I made 500K on a trade, you can do it too tomorrow. That stuff doesn't work. You need to find someone that says, okay, this has a 52% win rate. I made $7,000 on it, but that's because I've been trading for 15 years. And I'm ex-institutional trader, so I've got lots of capital. That type of the real side of trading. Anyway, I think I've rambled enough for today. True stuff. I need education. Top 10% mindset stuff. You need channels like this one. Exactly. Yes, you do need channels. And let me just put this into perspective. I no longer have a trading mentor, but what I do have is a business mentor. Because yes, I've been trading for a while, but I know nothing about business. And when I first started my business, I wasn't registered. I probably shouldn't say that. I wasn't making certain payments that you should pay legally, if you catch my drift. I didn't have business bank account. All my business money was going just to me. It was just going in my personal bank account, and that was it. So I was making all my business expenses from my own account, blah, blah, blah. It was a mess. That's really, really bad business practice, but I didn't know any better. Since I had my mentor, I've fully caught up on taxes. Actually, yeah, well, there you go. Fully caught up on taxes. I have now got business accounts. I've got contractors, not employees. It's all in line. I run a proper business now, and I wouldn't have known that if I didn't have a mentor to show me how to do it and teach me why it needs to be done. And it's the same thing with trading. You'll be on a certain path and you're like, oh, this might be working, this could work. And then, all it takes is someone that knows more than you to say, okay, I've been down this road already. You're going to fail. And, I'm here to help. So that's all you need. That's all a lot of people need. But again, it does cost money to get that type of help normally. And obviously, it does take hard work. No one is going to be able to do it for you. So that is my lecture done for today. I wasn't expecting to come on here for a lecture, but I hope it helped someone. Someone out there may have found some value in there. But guys, I'm going to call it a day. I have some bits to take care of. So guys, enjoy the rest of your Mondays. I hope you stay safe. Yeah, don't get margin called. I will see you later this week, I'm sure. I'm on here very frequently. But guys, have a good one, and I'll speak to you very, very soon.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.